Hello, traders. It is Wednesday, January 29th, as I like to call it, Fed Day. We are about 90 minutes from the FOMC statement. Actually, make that an hour from the FOMC statement. I'm not expecting a lot of fireworks off of this statement, but this does give me a little bit of a lull to do a recording and to show you what went right today and what went wrong today. And I want to qualify that by saying if you ever see any trader that only talks about their winners and doesn't ever have any losers, run. Don't wait around, run. We all have losers. And oftentimes I learn a lot more from my losers than I do from my winners. So I want to show you my loser today, and I want to talk about it a little bit and what I learned from it. So first of all, we've got the S&P 500 here, the SPY moving higher. We broke down below this upward sloping trend line. The market is trying to get back above it. This is a horizontal support level. Resistance now, it will be support at 327.50 if we get above it. This support level at 325 did hold. We closed below it and then yesterday poked right back above it. So 325 is first support on the SPY, then 327.50. Resistance obviously at the all-time high. So we've got a couple tails under body here, a couple of decent looking candles, and we've got some news pending. Yesterday, Apple announced fantastic earnings. Did the stock rally? Does it still have some gas left in the tank? That was the big question. And I'm going to start with Apple because I did trade it this morning. You can see the nice gap higher, but it's right kind of in the middle of its range. It has edged a little bit higher. And this is one of the trades that I did early. Stock gaps up, inverted hammer, bearish hammer, long tails above body. Uh-oh, that's a sign of resistance. So in here, I did sell the Apple January 31st, 327.50 calls, and I bought the 330 calls. Those 327.50s, given the high of the day, were out of the money, and the stock would have had to rally all the way back up to the high of the day for that to be in danger. I did plan this as a day trade, so I did not plan on holding it. But I like this little drop, and I felt that if the stock continued to fill in the gap, we would distance ourselves from that 327.50 strike price, and I'd be able to buy that spread back cheaper. Plus, after earnings announcements, implied volatilities tend to come in. They collapse. I also have that working for me. I would also have time decay working in my favor. Every minute that ticks by, I get closer and closer to Friday expiration. So I had all of those things working in my favor. I also had what I thought was a fairly weak market open that could pose a problem. So I'll talk about that in a minute. Here's what the stock did. Couple of long red candles closing on their low, good sign. We're below that opening gap, good sign. Here's a bullish hammer that takes us halfway up this red candle. I don't like that so much. Uh-oh, followed by another bullish hammer. Now we're back more than halfway through that red candle. Another tail under body. I'm out right here. I took my loss once we had eclipsed that long red candle. Took my lumps. I sold that spread for, I believe, 65 cents. I bought it back for, I believe, 85 cents. Lost 20 cents on it. Not a problem. I had to go with my rule base, which you had a downward sloping trend line here that was violated to the upside. That open from the red bar was also violated, and the stock was starting to gain some relative strength. You could see how it's starting to move higher. So I closed that down, and as I looked at the stock, I realized that it actually is shifting from a bearish looking stock to a bullish looking stock. I'm going to overlay the SPY, and you'll be able to see that a little bit easier. So you got the market falling hard, but the stock actually starting to move higher. And as soon as the market finds support, it goes. A little bit of a market pullback right here, the gray line, the SPY, and you can see stock is compressing. Bullish hammer. So I got long the stock in here, which is around the 324.50 level or so, and rode the stock higher. I made really nice money when it compressed up here, so I got out for a little bit under a $2 gain. But I also, as the stock was starting to move higher, decided to sell a bullish put spread. Sold the January 31 325 puts, and I bought the 322.50 puts. Same idea. Stock continues to grind higher. distance itself from 325. I make money on that spread, and I can close that day trade down. Implied volatility should be working in my favor, and time decay. So when the stock got up here, they really didn't drain the premium out of Apple at all. I was only able to buy that spread back for a 6-cent gain, but a 6-cent gain nonetheless helped take some of the sting out of the earlier out of the bearish call spread I sold, and I made more than enough money on the stock to cover my losses. So in total, I was whole. Actually made a little bit of money on Apple. So that was a misstep this morning, but I had another one. I'm going to show you that as well. We'll go into the SPY, and I'll show you why I thought we were going lower. Typically, you get an opening gap higher, long red candles closing on their low, tiny little pause here, bearish candle, long red candle here. Now we take out the high from the prior day. This is looking very, very bearish, and now we're in negative territory. So I did buy some puts here. I bought a third of a position here, and I was adding with the idea that half of this red candle needed to be preserved and that we would stall out here and then have another leg down. This would have been a sign that earnings season was not as good as it needed to be and that there was not any gas left in the tank and that we were going to start seeing some selling. This was a little bit of a warning sign in here for me because long tails under body, I knew we were going to get a bounce. I knew I'd have to shoulder some pain. I was trading the February 7, 328 puts, so I had time. These don't expire for a week and a couple of days, so no problem time-wise, but I had to respect what I was seeing on the chart. As soon as the market ran up and we took out this long red bar, I knew I had to close the trade down. So I did close that down. That was about a 10% loss. I lost 39 cents on those put options, and needed to take a clear look at what the market was telling me. Now, here's what went wrong with the trade. The first thing, and I mention this all the time, you have to put everything into context. And I should not have expected a big move, even though all the signs were here for a big move. I should not have expected one today. We had choppy trading yesterday, back and forth, and this is FOMC day. We can expect choppy trading and position squaring ahead of this statement. So even though it looks really ugly on the open, I should have just stuck to my guns and not traded. So that was my fault. I also was trading against my 1OP indicator, which is kind of a cardinal sin for me. And oftentimes we have these indicators and we think we know better. You can see how 1OP came down and it crossed in here. We had the couple of long tails under body that we like. Boy, was that good. It nailed it. Freaking nailed that move. I missed it. Not only did I miss the trade here, but because I was in a bad position, I'm looking at exiting a losing position instead of looking at joining a good trade. So it's okay. Took my first lumps there. As the market started to move higher in here, I did actually buy some calls right in here as the market was compressing. And I bought the January 31st, 328 calls. And my reason for doing that is that we had a compression and all of the gains from this long candle were holding, and we had tails under body, which was also good. SPY popped higher. These calls did well. They were looking pretty good. We had a little bit of a red candle right here. We needed to tread water and hold all of these gains, and we didn't. As soon as I saw that red bar, I was out. I took, I believe, a 6-cent loss on those. So for the day, I'm down 16% on my SPY trades. Oh no, it's nothing that dire. All it's going to take is one good trade for me to make that up. I've got a lot of 50% winners, even 100% winners on my lotto trade. So I'm not worried about this, but I did want to convey what was going on, what my rationale was, what my thinking was when I got out of the trade, because you have to know what your expectations are every time you enter a trade. And when those expectations prove to be wrong, then you need to shut the trade down and move on, knowing that you'll have many more winners than losers as long as you stick to a rule base. So my rule base here is knowing this early pattern and identifying it. No problem getting short. I didn't put everything on right here at the low. I wouldn't like doing that. And when I see really big moves down like that right out of the opening gate, it tells me that you have to be pretty aggressive getting short, because the bounce that you want to short never comes and the bottom drops out just like it did last Friday. So I put some on here, put some on here, put some on here, averaged in, but then had to cover right in here as we took out that long red candle, and that opening price here was my stop. I did not expect the market to go back above this price. When it did, boom, shut it down. Got to be out. Compression here, looking for a breakout and to challenge the high. Okay, everything's good. Yeah. I like that. I like that a lot. That was not particularly the candle that I wanted. I want to hold this halfway point right here in this compression breakout. Uh-oh, get out. Just take your lumps. And knucklehead, it's FOMC day, so you're going to get choppy trading back and forth. Don't do anything with the SPY. I am looking forward to maybe a little bit of news and maybe a little bit of movement today after the FOMC statement. We'll see. We've got Microsoft announcing after the close. We have Facebook announcing after the close. We got Amazon tomorrow. By tonight, I'm going to have a really clear picture of what's going on after those earnings releases and the earnings reactions. And I believe we're going to start selling some bullish put spreads tomorrow morning. I'm producing my weekly swing trading video tonight, so I'm going to be looking for lots of opportunities. We got a lot of earnings coming out right now. So let me cover a few other trades that I did today. It wasn't all bad. I had some winners. So let's go in and take a look at what I liked. Starbucks, right out of the gate, was on my heavy selling list. I don't know that it's still on there, but I'm going to put it up there. There it is, the second stock. Went right to that search early this morning, shorted it right on that gap right here around the $87 level. Ouch. That was a long green candle, but I shorted more right here. I couldn't believe that it retraced all of that. Shorted it here, came down, covered that position down in here for a big gain. So Starbucks was very nice. They are going to have to close 2,000 stores in China temporarily while the coronavirus is spreading. So that is going to impact their earnings. Shop. I saw that stock early in the day. Love this opening gap higher. Let's go to that D1 chart. This was on one of our searches also. Love that candle there. Big day yesterday. Breakout today. Okay, so I like this breakout. Now, what do I do with this stock trade? Well, I put it on my radar. I wanted to watch it. It's on my watch list. Okay, it's starting to pull back a little bit. So I drew a trend line connecting these two tails, and it came down in here like this. I use that trend alert tool right here, and I can show you how it works. I'll use it on the upside, and it's easy. You click alert, then you select your two candles, click on the bottom of that, click on the bottom of that. There's my alert line. If that alert line is violated, I'll know about it. Well, I drew a downward sloping one because I wanted the stock to come in, and then to be alerted. I was alerted right in here. Stock had good relative strength. Sold it right up in here near the high of the day. Made an excellent profit on that stock. Also traded MCD, McDonald's. I like that early action. And I was long that stock, right in here as it was taking out this high. Sold it up here when the stock started to compress. Now the stock is actually starting to soften quite a bit. We'll go into that daily chart. McDonald's may run into a little bit of difficulty here. It's trying to get through this resistance level, and you can see the tail above body here. McDonald's has a lot of stores in China as well, so they're probably going to have to close those just like Starbucks is having to do. Excuse me. So that was a decent trade. Then I also found DOCU on one of my stock searches. That was beautiful, breaking out to a new high. I bought DOCU. Let's see, that was at 1052, so that would have been right about in here. Took profits in here. Really, really nice trade. That stock looks like it's continuing to go higher as well. So, all told, really nice stock trade in Starbucks. Made great money out of the gate on that. Made a decent little bit of money on McDonald's, being long that stock. Made excellent money on DOCU. Made excellent money on Shop. Lost money on my SPY trades. I'm down about 16% on those. Made a little bit, all told, on Apple. So, where does all this lead us right now? Let's take a look at the market, see what it's doing. We got the FOMC coming up. Let's take a look at the price action over the last few days and see if there are any signs of what's going to be happening. We've got this big gap down that has been filled now. And you see how the market is starting to kind of level off in here and find support right around that 327.50 level. And I think that the FOMC is going to be benign. We're not going to see a lot of movement one way or the other. And the big news will come after the close today. Lots of earnings after the close today and before the open tomorrow. For those of you who like to trade earnings and hold over the announcement, I don't in particular, but I got a lot of research for those of you who do. These are all the companies that are going to be announcing after the close today or before the open tomorrow. And in Option Stalker, you can see I've gone back and databased over the last 3 years. What's the average move? What's the expected move? How many times has the stock exceeded the expected move over the past 12 quarters? So if you're a premium buyer and you like to buy straddles looking for that big surprise element, you want a big number here. You want it to surprise all the time, like Nokia. Let's see what else we've got here. BAX, Baxter. If you are a premium seller, you want a very low number here, like for Philip Morris. Only 6% of the time does it beat the expected range. So that's how you can use this research. You can also see all of the call open interest, put open interest. And if you want, you can just scan through this list and see who's going to be posting. Now we've also got searches. We've got before and after earnings searches. The after earnings searches are fantastic. So I'm on the bearish side right now. These are stocks that announced earnings after the close yesterday or before the open this morning, and they are below the prior day's low, and they have liquid options. So those are the criteria. Let me repeat that. These stocks announced after the close yesterday or before the open today, they are below the prior day's low and they have liquid options. In other words, these are your weak candidates. You come in here 1 second after the opening bell, look at this list, see what's tanking, watch the first few bars, see if you've got any major horizontal or technical support levels that are being breached, and get on them. The other side of that equation is after earnings bull. Liquid options above the prior day's high, announced earnings after the close yesterday or before the open today. These are your candidates. GE was strong right out of the gate. That was a nice one. We'll go into that 5-minute chart, and you can see compresses, then it takes out the high. Really nice entry point. Boom, boom, boom. You're in right there. So really good. Boeing's been pretty choppy today. Long tails, not a good sign. Long tails, anytime you see long tails above and below on a chart, whether it's SPY or a stock, this should automatically tell you indecision. Indecision, choppy, still looking for some direction. But Boeing is actually starting to hold its own. This may be a bullish put spread candidate. I love the way that it came down here, took out this support level right here on a long red candle, then came down the next day and found support closing near the high of the range for that day. And this was on a very bearish market day. The stock was able to close in the upper quadrant of its daily range. And then the next day when the market sold off, it was gangbuster out of the gates, go, go, go. So I think this low right here around that 306 level is probably in. And the stock looks halfway decent in here. It looks like it may make a run. It's trying to get through this downward sloping trend line. It's got horizontal support right here. So I would need to see Boeing hang in there and put another long green candle in, closing on its high, and then I'd feel pretty good about selling a bullish put spread below this 325 strike price. Still got some work to do. I want to see it above that downward sloping trend line. So it's got some work to do, but that could be setting up for a nice trade. Getting a little long-winded on this video, so I want to conclude it, but I especially wanted to show you a losing trade, why it was a loser, what I did wrong. My two big flaws this morning were, number one, not identifying that this was an FOMC day and that the market would probably not have any sustained directional movement either way, and that those long red candles on the open for the SPY were nothing more than a head fake. The second thing I did wrong was I should not have faded my 10P indicator. It's so dang reliable. I paid the price for it this morning. So let's see what happens after the FOMC statement today. I don't really have a good call in it. I don't think it's going to have a big impact, but the earnings after the close and before the open tomorrow, they are going to have a big impact. Right now, the coronavirus is being discounted to a degree. The economic impact is not really well known, but it looks like it's really gonna hurt China. It's temporary, and that's why the market is discounting it. Thanks so much for watching. If you like the content, please give it a thumbs up. Please subscribe to this YouTube channel and turn on your notifications, because you never know when I'm going to be posting my next video. And who knows, maybe I'll even post my swing trading video tonight. Typically, I wait 3 days before I post it to YouTube, but I might post that tonight. So make sure you subscribe to the channel and turn on your notifications. Thank you. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.